had a great week, despite a price target cut from Credit Suisse, writing that the long-term bull thesis remains intact, but challenges loom in the short term, including Shanghai's COVID shutdown, which Credit Suisse analysts say is hurting deliveries there. Joining us now is the analyst behind the call, Dan Levy. Dan, what are you looking at that gave you that kind of insight on China today?
Thank you so much for having me, Sarah. Yeah, we've known that throughout the quarter, the Shanghai shutdown has limited Tesla's production in Shanghai. Shanghai is a really important factory for them. In recent quarters, it's been as high as 60% of their total volume. In April, there was minimal volume. In May, it was roughly at half pace. And so that's enough to really drive the Qatar estimates.
Although last quarter, there was a lot of hand-wringing about the China shutdowns in Shanghai and didn't turn out to be that big of an issue. And in fact, some of the commentary on the call was pretty bullish on China.
Yeah, last quarter, they didn't see much in the quarter itself. It was still a fine quarter for deliveries. Really, the big positive in the quarter was the margins. But this quarter, you started to see more of an impact on the volume. You'll also see the appropriate margin hit because that is a very high margin facility. And then on top of that, there's also some margin impact from the ramp of the new facilities in Berlin and Austin.
I'm looking at your targets here. You still expect this stock to rally, to outperform. You've got a $1,000 price target. You take that down from $11.25. Talk us through that decision.
Yeah, we are positive on the stock, and really the key message here is that even with some of the near-term noise that you're seeing around Shanghai and the shutdowns, I think the long-term story is very much intact. EVs are really the mega trend for autos, and this is the best stock in autos levered to EVs. They have a large lead over others, and in fact, we think that even with all the supply chain challenges, this just widens their lead over other automakers, given how well situated they are with vertical integration and also with their prior experience in EVs. We cut the price target because there is a discount rate component to our valuation. Obviously, rates are rising, so that's really what drove the cut to our price target, but we still think attractive upside ahead, and there's still a lot of growth here. We think this is the best levered story to EVs in our coverage.
Pretty bullish. Dan Levy. Dan, thank you, from Credit Suisse. Dan, it's up 13% this week. It's had a good week. It's still significantly off the highs, about 40% on Tesla. What say you?
Yeah, so if you look at the last few quarters, Sarah, Elon Musk usually sends out a rah-rah email talking about how difficult the quarter has been, and if we really kind of hunker down, we can make the quarter. He's done that basically every quarter for the last 3 or 4, and the stock usually rallies off of that. So we're rallying a little bit after being down more than 45% at its lows just a couple weeks ago, and I suspect it continues to rally into quarter end. Then we're going to get deliveries. I'm not nearly as optimistic as Dan Levy, but I don't look at the company the same way he does. I think they had a really bad week. I think that kind of money furnace comment that he made about the gigafactory in Austin and Shanghai, and not to mention what's going on in Berlin, I'm not sure it's the thing that a lot of investors think that they feel comfortable about paying for a $750 billion market cap company. I get it. It's a levered play towards EVs. I think there's a lot of competition, and I got to tell you, I think there's issues with China demand ultimately, and also how much demand do you think is happening out of that Berlin? And to me, I just don't think it's a great story right now, and I think Elon Musk seems to be very distracted with what's going on with Dogecoin, with Twitter, and whatever else is going on.